Hi, and welcome to this week's Ask Steve Schneider, where you, the Village's public, you email your questions into us and we answer them right here on the segment. Steve, I've got some great questions. How are you today?
I'm doing great, Mark. Glad to be here.
Wonderful. My first question is from Tammy in the Villages, and she writes, "Hi, Steve. My husband is already retired, and I will be retiring in the next 3 years. My husband has been a DIY, do-it-yourself investor, and has done all right for us through the years. That being said, I want us both to see a licensed advisor, if for no other reason than to hear that everything is okay. How can I convince him to do this?"
Yeah, great question, Tammy, and thanks for sending that in. Well, there's a couple ways you can go about doing it, but one way that we find is really helpful is to basically approach it as just a second opinion, like you say, just a second set of eyes, no commitment, no obligation. But I think it's really important that you do that, Tammy, because although you've had success as an investor while you've been saving for retirement, retirement financial planning is totally different, and we can help make that transition. Even if you want to help do it yourself, we can at least add a lot of value to the decisions you make in the future. But
I would imagine, Steve, that sometimes you play financial advisor and sometimes you play marriage counselor, because you have one party that, I'll bring this simple analogy, might be a little more conservative than the other partner. How do you deal with that?
Yeah, in other words, that's a great point too. Although you were saying that sometimes that happens, I can tell you it almost always happens. Rarely do we get somebody, especially if they come in as a couple where both people have the same approach to the market or reaction or even interest in investing. So we're very accustomed to it, and there's ways for us to make sure that the party who has less interest or less experience at least understands the basics and what we're doing and what's happening, and then still support the person who is doing a little bit more advanced, or let's just say is going to be the main driver for all the decisions. But we deal with it every day, very, very common, and it's something that we've learned to deal with.
My next question is from Robert in the Villages, and he writes, "I'm concerned that all of my annuities are variable annuities. I called my advisor and he said there's only a 1 to 1.5% fee on them. How can I check to make sure?"
Yeah, that's a really good question. The topic here is variable annuities, and they can be very complex. In addition, a lot of times when you talk to somebody, they don't give you all the information. So what we do is we offer a service where anybody can bring any annuity in, just bring the annual statement in, and for, like we said, no cost, no obligation, we'll explain all the details for you and show you where we can verify if there are fees, how much they are, and potentially there may be a better annuity or a different investment that works for you. But you should definitely get a second opinion.
Yeah, and as a quick follow-up to that, and correct me if I'm wrong, Steve, the annuity that's received maybe the less than sound press is the variable annuity. And if you would take a minute to talk about that.
Yeah, the term variable annuity, especially the word variable, is a specific type of annuity that a lot of the industry has replaced, and especially in retirement, there's a lot better options than a variable annuity that even if it performed well in the past maybe, that it may not be the best in retirement. So today's fixed indexed annuities, which is replacing most of those variables, may be more appropriate, and we can help you make that decision or at least evaluate if that's an option for you.
Wonderful. My last question is from Carl in the Villages, and he writes, "Steve, I have 3 401ks sitting at my old companies and a 4th at my current company. I'm 62 years old, and these 4 401ks represent all of my retirement savings. I'm looking for some ideas on how to position myself for retirement. Help."
Yeah, no, great question again. Essentially, that's very common, that most of us saved a lot of these retirement funds in retirement employer plans, 401k, 503bs, those type things. But what's really important to recognize is all of those have a lot of restrictions in what you can invest in, and quite often limits what you can do in retirement. And they're all available once you retire to be moved over to your own IRA. It really opens up the options of what you can invest in. And that's where we can make some real good decisions and use real modern type products to get you a benefit of your assets that you couldn't really get when you're in a 401k or an employer plan. So definitely once you leave an employer, you should probably come in and see us, and we can talk about those options and get you the best for that money that you've really worked hard to earn.
Steve, thanks so much. Hey, if you want your question answered here on the show, it's really easy. Just email it in to the URL that you see, or you could give us a call in the office. We'd love to start a conversation with you.